Welcome to Unlayered. I'm your host, Sal, along with Dave here. And today it's just us. We're keeping it casual. We're taking a bit of a breather in the midst of all this chaos that's happening in crypto markets, specifically on Solana, but pretty much everywhere. And we're going to talk about just a few topics that seem relevant today. We're going to talk about meme coins. We're going to talk about the Saga phone, which I think both of us have been using a lot. The points meta that has just invaded every protocol to this day. We have a lot of thoughts and rabbit holes you want to get into on all those fronts, whatever else comes to mind. But yeah, I mean, I think that's kind of where we'll start things. Dave, I don't know if you have anything else to add to this. You want to keep it more conversational and yeah, just kind of get your feel on the pulse of what's happening.
Yeah, exactly. I think just nice casual conversation, catching up. And I think we are talking now at a very exciting time in Solana's history, probably, but with the upcoming Jupiter airdrop, with meme coins going absolutely mental on Solana. And really, I would say leading the crypto market at the moment. I think Solana meme coins are the meta at the moment. And
Yeah.
I mean, that's a first, isn't it? We haven't really seen maybe like NFTs at the end of last bull market, but we haven't really seen Solana leading the whole industry really for a while. So
It's unusual.
it's exciting. Yeah,
If
for
you
sure.
if you look at the top meme coins by market cap, Bonk is 3 at about 800 million. Dog with hat 400 million. Now people are calling for that to flip Bonk. And then if you keep going down on this, actually, Myro, which is another Solana one, 200 million. Very interesting. You go 2 more down or 3 more down, Silly Dragons, another Solana one, right? The point is, and all these charts have gone up in the last 7 days, and all the other chains have gone down or flat. That is wild to me, and that it probably hints at what's to come. Once retail really gets embedded in this, I mean, every day or every week, it seems like there's another meme coin on Solana specifically that pops off that kind of encapsulates pop culture of the day, flavor of the day. Win is a big one, right? With the Drake meme when he was on Twitch or whatever. I need a win, max win or whatever. That one I saw pop up like a couple weeks ago, and now it's at a massive run up. I see a world where people kind of flex how in tune they are with pop culture by making bets on tickers like this. And that is not stupid. I think that's actually pretty fun for a lot of people. And you can only do this on Solana just because of how cheap it is to launch meme coins, to trade them at small size, right? People don't want to allocate, 10K into this stuff and pay 100 in gas. But curious on your thoughts with all that.
Yeah, I completely agree with that because I keep asking myself, is this the same as we've seen before, or is this something completely new? Because it doesn't feel like before. The previous bull market on ETH, you had Shiba Inu and it was costing you $50 a transaction. So it was just focused
Right.
really on 2 tokens during the whole bull market. This does feel completely net new. And as you say, it does feel far more current. And it's almost like the next generation of people thought it would be social tokens and social applications. And maybe this is the sort of crypto native social interaction, which is buying meme coins on Solana and then shilling your bags on Twitter, basically. Because we've often talked about if you're going to do a social application on crypto, you need the distribution of one of these big sites. There's no point trying to start from naught, really. I mean, it's such an uphill task. So you might as well leverage what you've already got. And basically, we're leveraging Twitter and then interacting some sort of degen trading element to it. And that's what this feels like to me. So I completely agree.
You're essentially financializing attention. Meme coins get attention. They pull people into crypto rails. And then once they're on those rails, you can sort of get them to do other things too. Now, the best example of this is the Saga phone. Literally, we were talking to Steven, who essentially created the phone, lead engineer at Labs for the phone, Solana Labs. This was what, in May? We talked to him in May.
Mm.
The phone struggled with sales. It went on sale basically 2 months after it launched for half off. I paid full price for it. I used it sparingly, let's put it that way. And we'll do a full review of this phone in just a second because I have a lot of thoughts on it. But I guess the point I'm trying to make is it wasn't until Bonk went up in value and the airdrop on it was essentially worth more than the entry price of the phone that they sold all of them in like a few days or whatever. Then people started using this thing and they're like, hey, this is actually kind of cool to have essentially like a ledger built in where I could sign transactions with my fingerprint and it's very secure. App developers came in to this gold rush. Access protocols trying to first do a big airdrop that's almost the same amount as Bonk at this point in US dollar terms. Now everyone has a Saga strategy. It seems like they're all trying to make mobile apps, whether it's for this phone or an experience for the next one that they're going to do that pre-orders just opened up for this week. But that's like another example of this story playing over and over again, where it's not just yelling at people to care about the App Store duopoly, right? No one cares. But you introduce some fun into the equation through this Bonk airdrop, which, yeah, I mean, it happened to go up a lot. The airdrop's been there forever. Now you get some initial tension. Now they're in the rails. Now you can do the cool stuff with the phone and maybe even attempt to disintermediate that duopoly, which is exciting. And Toli's been tweeting a lot about that.
Yeah, again, I completely agree. And I think that they almost like need to remarket it and not say that certainly it was potentially a mistake going high end, because then you are competing with iPhones and things like that. And I think they just almost need to move away from the fact that it is a phone and it just becomes, this secure seed storage device, which is also an airdrop machine effectively. And then you can access apps which you can't necessarily access anywhere else, but just sort of reframe it in a completely different way. And that is what is going to get, I think, a potentially critical mass of people to actually buy into this. Because I say, if you're almost financializing the purchase of a piece of hardware, then suddenly it doesn't matter the quality. It doesn't matter that it took a few extra weeks to ship and that it's not quite up to the specs of the latest iPhone 16, because you're not getting the airdrops on the iPhone 16. You're shelling out a grand if you're lucky, and then however much on your monthly fees. So yeah, I completely agree. It's almost become, hasn't it, like a DePIN project, and rather than the native token being related to the phone directly, it's almost the meme coin is using its memetic power to evangelize and promote certain things which it would like to see progress and help push the crypto thesis forward. It's almost like the next gen of public goods funding, if you like.
I mean, I'm getting this question a lot, like from people that want to pre-order the next one. Should I do it? Should I pre-order it? Thoughts on this phone? I have a lot of thoughts. So the way I use it these days is I use it as my kill phone. So for those that are not familiar, kill phone is a second phone that doesn't have any fun apps on it. So there's no social media on it. Obviously, I have a different number on here, right? I'm using Helium, so no one knows that who I am on this phone. I don't really have any contacts. There's no distractions through messages. I have a separate Telegram that has no contacts in it, so I just use it for testing purposes. I have like Uber, and that's basically it. Basically, the apps you need to like survive: Uber, Google Maps, nothing else. So that the idea is you switch to using this phone if you want to focus throughout the day, go on a walk, not have Instagram or those other fun things. So in that sense, it works. It does its job. What I'll say is I think the key thing here is they really need to rethink about how this embedded hardware wallet works, for multiple reasons. One, if you have multiple fingerprints on this thing, it makes you use a PIN every time. Now, I don't know if it's a bug with mine. I suspect it's not. I suspect that's just how they only want to have one fingerprint allow you to sign transactions with that embedded hardware wallet. In that case, I don't think that's an acceptable trade-off. I think a lot of people use the phone in either hand, depending on if they're busy or not. And, you don't want to have to switch over and like sign it with just that one fingerprint. It seems minor, but it's gotten very annoying where I basically have to enter the PIN anytime I want to sign a transaction. And then the other point is that it's modeled too much like this old school meta of just wallets where you're signing 5 transactions to do a swap. Is that important from a security standpoint? Probably. The thing is, though, if you use these like things like BonkBot, Unibot, Banana Gun, I'm so used to now a world where, or even smart contract wallets will do this, where you can bundle a bunch of transactions. I think ETH people call this like intent based execution. I don't really like the buzzword. I don't really know what that means. An intent, it's just an intent. You know, why do we need to overcomplicate things? I want to buy something. Let me just click one button to buy it. Right? You can't do that with this secure approach on Saga. It's very, very cumbersome. And then it actually takes you completely out of the context of the app. It shows you a completely different pop up because I think they want to restrict access to what's displayed on the screen. I think Steven articulated this way better, but it's a security reason why when you sign a transaction, it kind of takes you out of the app and shows you a screen showing you what's going to happen. Then you sign it. Point is, it's a lot of clicking. And in fact, this is slower than desktop, which I didn't think that was possible. I figured a mobile would be faster. But I'm like going around and claiming these airdrops. And then the final piece to this puzzle, which is hard, is it's probably because no one's put in the time yet, but a lot of these mobile apps, quote unquote, mobile apps in Saga in the App Store are just like skinned browser apps. And man, that is just the worst of both worlds. Using a web browser on a mobile device that where you need to connect a wallet is a very painful experience. Um, and so this is nowhere near ready for prime time. I've only am using this because there's a monetary reason to. I'm on checkphone.xyz. Each phone has a $1,600 worth of airdrops at this point. Most of it coming from Bonk, Axis Protocol, and Saga Monkeys. But they have this combination of tailwinds now. They have the attention. They have a chance. They have a second crack at this phone with this new one that's going to be a little bit cheaper. I would optimize almost entirely for the smoothest possible way to securely interact with digital assets. But I don't know. I'll pause there. I don't know if you have any thoughts.
I agree that I don't think I have to enter the PIN, but I certainly have to put my fingerprint on the back in
Yeah,
quite
like
an
multiple
awkward
times.
position multiple times.
Yeah.
And really, it's this awkward juxtaposition of you're trying to make everything hyper secure, but at the same time, you're trying to let people degen on a hot wallet I mean, it's not hot, but effectively mobile.
It should feel like a hot wallet though, which is the point.
Yeah. You
That's
use
the
your
goal.
mobile wallets because you want quick access, while you're on the loo
Yeah.
to your favorite app. So
Right.
yeah, unless they can really like smoothen that out, I agree. It's just awkward. And it's two different use cases basically clashing against each other. So I do agree with that. I think the apps improve now that there's 20,000 people and strong potential that there's going to be 100,000 people signing up for. Do you think it'll get to 100,000?
Yeah, that's another question I'm getting is like people are asking if they should pre-order the new Saga. So the thing is like what the Solana team did not do well is match supply and demand. I mean, granted their batch was only 20,000 phones, right? That's a pretty conservative estimate and they basically didn't hit it until Bonk. The worst thing you could ever do in hardware is have too much inventory that just, it ages very quickly and hardware, it improves so quickly as an industry. So what they're going to try this time, and that's why they're doing the pre-orders this way, is match supply and demand. Where does that number land? I think it's definitely more than 20,000 phones because they sold all those out and people are just going to now hold this recency bias and assume that the next batch of phones will make them rich. Unfortunately, I don't think that's going to be the case at all. I think that's an artifact of limited supply and just the unit bias for Bonk was trading so much lower. And so no one's really expecting it to be worth $400, right? It was supposed to be worth $20 or something like that. They're positioning this new phone more as like there's a ref link attached to it. There's a leaderboard for like getting people to buy it. And then the final piece is, I think, like Mad Lads, for instance, is doing some sort of a raffle, but it's not like a guaranteed thing, right? It's like you have a shot at winning a lad, which, it's going to be worth 20, 30,000 when it comes out or more. So it's hard for me to imagine a world where this thing is going to make you more money than the original batch of Saga. That said, it could actually be a really cool experiment to just get people to use like a crypto native phone that has that embedded wallet, that has the security. It's way more fun than using a ledger. I hate using those.
Yeah.
So I don't know. I mean, that's kind of how I see it. Maybe it's 50,000 or so. That's probably my guess. I don't know about 100K. It's possible though. There's just a lot more attention on this now.
I think it's successful if it can receive enough airdrops to pay for everyone's phone again. I think if that becomes the meta of sign up for the phone and it will be free, and hopefully you receive more airdrops than it was actually worth. And the other thing is you can mine mobile. You can mine, I think it's called Getgrass. So just from sort of walking around or being connected to the Wi-Fi in your house, you can mine things that way as well. And so, I mean, doing the maths, $450, I think is what they're asking for at the moment, 100,000 phones. So that would be $45 million of airdrops. So if you can get 45 million, I just kind of think like the big projects in Solana should almost just, like, for example, Jupiter. I think they're now going to be doing an airdrop every January. Why don't they just portion a tiny bit of that airdrop? Because it's probably going to be worth $1 billion every January. Couldn't they just clip off 10 million of that, for example, to go to all of the Saga phones and just sort of get contributions from the big projects? I think something like that, if it just becomes this airdrop machine, then I don't really see how it wouldn't be successful.
Yeah, it just comes out of the motivations. Is it worth it to airdrop someone like us that has his phone? I don't know.
It's about expanding Web3 app chains and improving mobile interactions in crypto. It's about pushing that whole side of the industry forward, I suppose. So as I say, as I was mentioning earlier with Memecoins, it's almost public good funding, the next phase of it. So to me, 45 million, if it launched in 2025, hopefully the bull market's still going on. It sounds highly plausible to me that every phone would get enough airdrop to cover the cost of it.
Well, by the way, what do you think they're working on? I think there's some rumor going around. There's going to be some big feature. Did I miss it? I mean, I thought it was going to be support for another chain like ETH or something, because we alluded to this in the last podcast when we talked about this, is that the code is open source to use the secure enclave to interact with the mobile wallet adapter. ETH could conceivably like support it. Other chains could support it. Maybe not ETH. Maybe one of these next gen, like Say or another one of these parallelized L1s. Do you think that's kind of what they're hinting at? I mean, that could be big actually, because now you're going cross chain on a mobile device. You're getting another ecosystem excited for it. Maybe it's something else, but curious on your thoughts.
Yeah, I think that would be the most likely way. And again, it's sort of expanding the ecosystems that you might receive airdrops from. It's almost the Trojan horse thing, isn't it? Just sneak them into the city because it's going to be an airdrop device. And then suddenly you've got potentially in a few years, like millions of people around the world with a decentralized app store. And then you can potentially start doing quite powerful things.
I just wanted to make a comment, which is I've been using Helium for only 9 days now on this phone because I switched over I had this phone for so long. I was using Google Fi because there was no Helium Mobile available for it. So I switched from Google Fi to Helium Mobile finally recently. In 9 days, I made about $9 worth of mobile tokens. Now, granted, price is really volatile, but it's not bad. So that kind of tracks out to about $30 a month or so. That's more than the cost of the plan. That's compelling. You're essentially getting paid $10 a month to have free service. Does that sustain? Maybe, maybe not. It feels like it's always going to be cheaper than a plan. So to the extent this thing wants to go mainstream, right? That is an incredibly compelling proposition that, by the way, you mentioned on this podcast when we chatted with my former boss, Alex Thorne at Galaxy, which it was just an idea where we could have a national plan that is cheaper than the incumbents. Now that's possible with these tokens. People might even be incentivized to hold it because they believe in it so much. That's really compelling. That's really, really compelling.
Yeah, if you use Helium, as you say, it reduces your costs, and if you then mine it from your Saga phone, then suddenly not only are you probably getting a free phone from all the airdrops, but you're also getting free coverage from just mining mobile every month. So yeah, it's the flywheels that we've been talking about for the best part of a year now in DePIN that I think are really starting to come to fruition. I think Helium is grossly undervalued given the rate of adoption and just given how appealing the proposition is. And Hivemapper, of course, is the other one that, again, we've been talking about for a while, and I think it's really sort of picking up steam. It's just listed on Coinbase, I think today. So yeah, how are you seeing that industry, Sal? Because I think potentially you've been more skeptical. Is that fair to say on the DePIN industry to date? So
Right.
how are you feeling on it?
So I think I definitely was waiting for things to happen there. I think I looked at Helium, for instance, when they were focusing on IoT, and was like, "There's nothing here, guys. Like this,
Mm,
nothing's happening." It's very smart that they kind of pivoted more towards mobile. But now I've started digging some of these projects. One recently, like Demo, for instance. I think that's super cool, especially in a world where the people have tried this, right? Without crypto, AI was this idea that you'd buy essentially like a camera for your car for $1,000. It would connect to your OBD2 port on your car. It would take advantage of regulations increasing the fidelity of lane change assist, because they have more sensors in cars now, basically, so that it could conceivably give you some autopilot-esque features for
mhm,
$1,000. And then the trade-off is you're helping them train their models. And so they wanted to have a decentralized way. Um, George Hotz, that is the guy who created this company and who was a famous hacker for many years. They wanted to decentralize data collection for training AI models for autopilot. It didn't work out. It didn't work out, but it was a very interesting experiment, and the ingredients were seemed to be all there to kind of decentralize and fight against a giant incumbent like Tesla to build really world class products for people at scale. Demo's cool to me because they're in a lot of ways doing what that company did at a much smaller scale. The device is only $99, but it still plugs into your port, and it helps the company collect a bunch of data. And then that data, you're compensated for that data with the Demo token. And so it's almost like this open source IoT network, but it's focused more on just vehicles for now on the road. Um, and I think that it makes a ton of sense. Like I think they sold out of their the device is 5 weeks back ordered. The data is extremely valuable, and we're starting to see experiments like this, outside of the OGs like Helium. And obviously, like you have the compute ecosystem, whether it's Render or IONET.
mhm.
But these ones are really interesting when you're dealing with physical movement and objects, out in the real world. So yeah, I'm becoming more bullish is probably the TLDR, but I don't know if you have any other projects that you've been excited about.
Teleport, we obviously spoke to them a long time
Oh
ago
yeah.
um, to try and basically subvert Uber's monopoly, or not monopoly, oligopoly around the world, because they haven't actually managed to dominate every market. But I think it's interesting. But I think when something is being created that just could not be created by a centralized entity, or if you want to create a centralized entity, it's supremely expensive.
Yeah.
I think for me that does get me excited. And you only have to look at Google Maps, and there is only basically one street view map of the entire world that's ever been created, and that's by one of the most
Yep.
valuable companies in the world. And the idea that a crypto startup is trying to compete with that. And the thing that really gets me excited about deep in projects is, and Alex Thorne actually pushed back against this, and I think he's completely wrong. Price really matters. And
Mhm.
so what you tend to get is that they're cheaper and the service that they provide is better. And because it's decentralized and because you are passing on ownership and pseudo equity to early participants. And so as a result of that, you don't generally have to pay very much to create one of these startups. And the service tends to be better because it's outsourced to everyone around the world. So cheaper and a better service for me can disrupt massive industries, because ultimately every disruptor in every market has come in cheaper and better, or at least one of them, and ideally both of them. Every
Right.
disruptor ever.
Yeah. It feels to me like the business model and the stack going forward is open sourced kind of base layer protocol to handle whether it's on the Uber side, it's going to be connecting drivers and riders and finding the optimal route. Or if you were to conceivably do an Airbnb, it would just be the system that allows you to create a marketplace, show your property online, have people make offers or whatever to schedule time to stay there, right? That stuff will get open sourced. The operators, so the company that you interact with that is wrapping this interface or this backend into an app, they will just build that front end logic. It's actually pretty similar to like DeFi. That's the cleanest example.
Mhm.
MetaMask is using 1inch or whatever on the back end, um, and has that interface for you to just trade and hold your assets. So it will shift kind of the burden of responsibility to do KYC checks, to like do background checks on drivers, to have the nuts and bolts in place to make this a real world business, to that front part of the stack. And in doing so, by reducing all that complexity, the engineering complexity of building the systems, your take rate now goes from 30% to like 5%. And I think that's a TLDR for a lot of these DePIN projects. That's why they all work. Um, and I'm mostly talking about the ones that I guess would compete with Web 2, whether it's DoorDash, Airbnb, Uber, decentralizing those. That feels to me like it's now possible. My only concern is tokenomics are very hard to get right when the users are interacting with something a lot. So that is to say, it's a lot easier to have clean tokenomics that work pretty well if it's passive, whether it's staking once, making a liquidity pool once, and just chilling, whether it's connecting this demo device to your vehicle, just driving. If there's a lot of human interaction at different steps, your attack surface just increases exponentially. That I think can get solved. So there's kind of like two schools of thoughts here. One is like, how does DePIN disintermediate existing Web 2 companies and decentralize them and make them cheaper? And then to your point, there's going to be a whole class of just new things that you can never do before because it's not conceivable for a centralized entity to do it. That's exciting too.
You mentioned difficult to get the tokenomics correct, and that made me think of another very pertinent subject, which is the points meta that has been going on.
Yes.
And really, it does feel, I think along with DePIN, it feels like probably the other highly plausible way that we're going to see tokens distributed in a brand new way this time around, because it's similar to what we saw in 2021, but it's almost like a refined version of the airdrop meta that we saw last time, where the protocols have more power to curate and incentivize users to act in a way which is beneficial to the ecosystem and the protocol, and not just in a short time basis, but over a much sort of longer duration. So I'm bullish that points are going to be one of the main metas of this bull market. But I know you've got a load of thoughts on it, Sal.
For sure. So points are interesting. People have been very negative points.
They want the airdrop.
They want the airdrop. And when people say that to me, my first reaction is, well, thank God you hate them, because they're doing exactly what they were designed to do, which is keep people like you out of it. Right? The whole point of points is to keep the mercenary capitalists kind of essentially mercenary capitalists, keep them disincentivized to use your product for all the wrong reasons, which is to farm an airdrop. It's still crazy to me that we had this era before, just straight liquidity mining, where we're literally just giving the tokens out for doing things. That was never going to work. So do not even consider that to be a thing to ever come back. That is completely untenable. The right way to think about points, and the reason why I think they'll never go away, and in fact they'll increase, and I think that's a good thing. We want them to exist, right? It boils down to this, and I'm kind of inspired heavily by a blog that A16Z Crypto put out about 2 years ago. So we'll link that in the show notes, because I think people should read it. And I'll kind of do a TLDR on it. Basically, the whole point of points is you want to separate social capital from financial capital. Social capital is like your reputation in a system. It identifies, have you contributed value to this platform? And how do you signal that? So that's what points do, right? This is not supposed to be transferable. This should not be financialized. That's why we're calling it social capital. The cleanest example of this is if you go on Reddit, you have karma. So if you look at someone's karma and it's 0 and they're doing a new post, now you know not to take them seriously because they're a new user, or maybe people just downvoted them a lot and so they're just always wrong. And on the flip side, if they have a lot of karma, that means they've made a lot of posts that people upvoted, so take them seriously. Right. But Reddit doesn't really have a financial side to this. I know one of their subreddits had moons or whatever. That kind of got nerfed. So we're just going to say they didn't have it. The other side of this is financial capital, right? So financial capital is the token. How do you reward contributors? But the thing is, you want to reward good contributors. You don't want to just reward everybody. And this is why you can't actually give the tokens straight up to people. And so there's a lot of ways to carve this out, right? You can linearly link your reputation to points and kind of issue them one-to-one. I don't think that's going to work. I think it makes more sense to like decide on a convexity. So for instance, a convex dividend rate is a world where you're giving more points to people that have higher reputation scores, and you're disproportionately almost nerfing the ones that are new and giving them a much smaller share. And then the opposite, the inverse of this is actually what Jito did, which is a concave dividend rate, where you're front loading most of the distribution to the smaller people. And as you accrue more reputation, it levels off. And so you're preventing whales from existing essentially. And I think that's why they did it. I think they saw they had a few massive whales. And so they wanted to redistribute capital to decentralize it. And so that's how that happened. Now, the point of all this is it's not like there's not a one way to do it. There's a lot of ways to think about it. Um, it's, size, supply, distribution, and then the relationship between points or social capital, whatever you want to call that, and financial capital. But you want to make sure that you're controlling for bad actors who just want to farm and extract as much capital out of your platform as possible. So that's why we want points, and I think they'll actually get more sophisticated. I think we're going to actually see things like decay systems where maybe over time, like you get diluted if you don't continually add value. Like your points don't just exist into perpetuity at the same rate. Uh, I think we're gonna see more sophistication around this. It's not going away, and it's a good thing, right? It is aligning incentives with the goal of the protocol and the user behavior.
Yeah, I've been thinking along similar lines actually, and I think the crucial point of it is that separation between points and the actual tokens. Because previously, if you wanted to say disproportionately benefit the smaller users or disproportionately benefit the earlier users, what they were doing in the last bull market is saying, okay, here's an airdrop moment in time. We've looked retrospectively and that's how we've allocated it. But if you wanted something which was ongoing last bull market, they were giving out tokens on an ongoing basis, and then you can't adjust it for like the smaller guys and the bigger guys. You just don't give yourself that ability. And so what happened was Alameda basically were piling in and farming the shit out of absolutely everything and dumping it on the noobs who were hoping it was going to go to 1 million. So it just all it was a whales game last bull market, and just
terrible.
Dumping on your head after a few days. Whereas that separation, it allows you to get the benefit of continued use and activity over a longer period of time. But it then allows you to say, I'm now going to go away and disproportionately benefit the smaller guys, the guys who got in early, and any other criteria as well. Because hopefully it's not just going to be as simple as that. As you say, I hope it's really going to evolve as these protocols understand what uniquely they need to help their protocol grow. Because for some, it might be social interactions,
Right.
It might be a protocol which is maybe a trading / social application, where you need that sort of Reddit style banter and forums and things like that to really make the application grow. And so I'm really looking forward to, as you say, seeing it develop and bringing in hopefully other non-financial KPIs into the way that they can then distribute the tokens. But yeah, just to reiterate that separation is absolutely crucial, I think.
And the other reason why it's crucial, it's a great that you brought up Alameda. It's because if you separate the two and you have this non-transferable thing, maybe it is a non-transferable token. It could just be a database entry. I think that's going to be easier to do initially. Reddit actually in their cryptocurrency subreddit had this thing called moons, where they tied it. Your reputation system was karma in that subreddit, so karma that you earned in that subreddit, and then the token was moons, which was on Arbitrum. It was actually pretty brilliant. They would only on a monthly cadence give you these tokens, and they had a checklist of like multipliers and nerfs essentially, where if you were like above the 99.1th percentile of earners, you just got truncated and then allocated down to a max amount, so you got capped. And then they would just measure like how much karma did you actually contribute to this subreddit, and they weight it based on also like what or who upvoted your posts and what their karma was in that subreddit. And so it was very nuanced is my point. And also because you have that time delay between when you earned it throughout the month and when you get it, you can manually like twist the knobs and adjust and kind of kick people out from the allocation, For instance, if Alameda was farming, but they were only farming points, you just identify, hey, this is the same guys taking all the money out of our protocol. We're not going to give them anything. No one's entitled to anything, right? Like every website has terms of service. So it's crazy to me that we don't have even more strict guidelines on who gets to earn tokens for these protocols when you only have one shot to make the token and do the generation event. Absolutely, we should be kind of controlling for who's extracting value out of it and making sure that only the best people are getting those allocations. And so, yeah, decoupling and having these time delays and controlling for who earns what. And then most importantly, adjusting them over time. It's such a dynamic world. Yeah, that feels to me like a much cleaner, safer way to distribute tokens to users and align incentives.
Yeah, I mean, I think the only thing I want to point out is the counter argument here. And obviously, by having points which don't have a financial amount associated with them, you are effectively giving all the power and all the control to the protocol's developers.
Sure.
And MarginFi, so I think great team. They've built an awesome product. I think the best Borrowland on Solana. But they recently had a bit of a PR nightmare when they came out and said, we're not even close basically to releasing tokens, and anyone who's been farming to date to get our points and was hoping for an airdrop, you're just mercenaries and we're not interested in rewarding you. Basically, it came across as very sort of dismissive. And I think that's completely wrong, especially when it comes to borrow lend protocols, because the first dollar in is the riskiest dollar. They are taking huge amounts of smart contract risk. When one of these protocols has just started, we've seen loads and loads of them getting hacked. And in fact, around the same time the MarginFi started doing points, Cypher protocol also did points, and they got hacked within a couple of weeks. So you're taking huge amounts of risk. And the protocol, as the TVL rises, more people are getting attracted to it because then they think that the airdrop will be worth more. And then the team is able to raise at a higher valuation. So there's huge amounts of benefits which are going directly to the team and off the backs of people who have taken the most risk in those early days. So I do think we need to be wary at the same time and need to continue to put pressure, I think, onto these teams, basically so they're not going to take the piss.
That's a good point. My only response to that, and probably a good transition actually for the next topic, is look, if you're taking on more risk to use something like MarginFi, then MarginFi should just pay you more, give you more yield or something like that. Look at Uniswap. It's a product that people use. They ate the impermanent loss because people just wanted to LP and they wanted to trade tokens. They had no plans to do a token until Sushi came around. Even Jupiter, everyone used it. And now they're doing an airdrop, and we probably won't even make a lot of money off of it. I don't know what you think the drop will end up being, but product first, have a reason to use it. If the reason you're using a product is because we're farming an airdrop, that is never going to be sustainable. Someone's going to be mad. A lot of people would be mad at some point. There's no way you're going to make everybody happy there. So I don't know.
But you're right. The risk should be rewarded with a higher yield. But at the start of a borrow lend protocol, there is no yield because the other side of it should be the demand. And if there's no supply, there's no demand. So you have to, just like DePIN projects, you have to incentivize that supply.
Yeah.
And you're incentivizing it by promising an airdrop. That is the yield.
Yeah.
So, I think it's a very particular case with the borrow lend protocols where you have to get over this cold start problem. You're taking on massive risk with the smart contracts that they've utilized. So these protocols do owe a lot, I think, to the early liquidity. Certainly the borrow lend protocols. Moving on to Jupiter. I mean, I'm fully psyched. We were talking about it a little bit before we came on air, and I think for me, it's the biggest airdrop since Uniswap. And obviously the Uniswap one was a retrospective one. People weren't expecting it. In fact, it was the first airdrop, so people definitely weren't expecting it. So this one, I think, in terms of the money, which is going to be airdropped over the 4 rounds that they're going to be doing, I think it will be probably 4 billion plus. And I think that's basically going to be the biggest airdrop, I want to say, that out of any protocol. I could be wrong on that, but if it's not the biggest, it's certainly right up there. And I think it's just going to be driving huge amounts of volume on the Solana ecosystem for years, because it sounds like they are going to potentially be doing it every January. They hinted at that on Twitter yesterday or the day before. So maybe it's just going to be an annual thing. And so I think for the next 3 years, there's going to be multi-billion-dollar reward for continuing to use Solana and predominantly continuing to use Jupiter. So yeah, I'm super psyched. And I think when you compare, for example, NFT trading, currently we see about 100,000 SOL volume on NFTs on Solana. That's about $10 million a day. I think we're going to see around $1 billion cash injection in a couple of weeks. So it's 100x what the daily NFT trading volumes are. So if you think what that's going to do to Solana, to SPLs, to meme coins, and to the NFTs, yeah, I'm hyper bullish, and I think this is sort of the next leg really in Solana's story of this bull market.
What do you think? Where do you think we land with respect to allocations? Assuming, I think you said $1 billion FDV or something like that. Maybe Uniswap's at 6.5, but market cap today is 5 for Uniswap. Maybe that's the right comp, maybe not. I think it's a lot of people will just make that comp because it's easier. It's the first thing that comes to mind. Even though it's fundamentally a different approach, right? They're using on the back end other DeFi protocols. But I guess the point is, US dollar terms wise, where do we think this allocation can land? Obviously, it's going to be a lot less than Jito because it's just a lot more wallets that qualify. But yeah, curious to hear your thoughts.
Yeah, I think it's 1 million wallets in total. Majority will be receiving the minimum allocation of 200 JUP. So I think it will get to $1 in the early days for sure, and I think it could easily go higher than that. That would put the FDV, fully diluted valuation, at 10 billion. Maybe it goes $2, 20 billion. So it's going to be outrageously expensive compared to something like Uniswap. But FDV always seems to be a meme during bull markets, not so much during bear markets. And
right.
And I think they'll be releasing about 2 billion tokens. So maybe the circulating market cap will be about 2 billion if it's $1. And people will compare that to Uniswap and say, okay, well, that's only 40% of Uniswap right now. So I think people will be able to get comfortable definitely with $1. And I think just as we saw with Jito, I think it can definitely go higher because all of the recent big airdrops have gone multiples in the days following. So I really don't see why we wouldn't see it this time, especially when you consider the fact that there's going to be an enormous amount of trading in the week coming up to the airdrop because they're going to be dropping a meme coin just to test out all the infrastructure. So I think there's going to be a load of trading happening then. There's going to be a load of trading happening during the airdrop. And this is just going to make everyone even more bullish about the future of Jupiter. So yeah, I'm really excited, and I think it's going to be pretty defining next 2 weeks.
Oh wow, yeah, 10 bill. Sol is at 42 market cap, so circulating 55. Yeah, I mean that would be insane if it hit that, but you just never know anymore. After Jito, I don't really know. The numbers don't make sense. They don't add up anymore.
Yeah, I do agree. Jito got to, it was over, I think, the valuation of Lido plus Flashbots. Yeah, and how can that be? The amount of staked ETH in liquid staking protocols is much, much, much higher. The percentage of total ETH is much, much higher than it is on Solana. And obviously the value of ETH is much, much higher. So they're making far more rewards on Ethereum. But it either comes down to bull market delirium, or it comes down to just how bullish people are on the future of this ecosystem and the impacts that low fees and high throughput can have on things like trading and things like MEV with Jito. So it's really hard to explain, but I think if anything is going to get an element of absolute insanity around it, I think it's this Jupiter drop. Because it's the first time we're seeing an aggregator really at play in crypto. It's too expensive to do on Ethereum L1. It's too difficult to do on the L2s because you're having to bridge between them all, and you just between the fees and the bridging and all of that, you just lose the benefits of aggregation. But on Jupiter, you can aggregate, and so it just makes it a far more effective tool at trading and at finding best price. And I think as a result of that, I think it's just going to become a natural locus of crypto trading in general in the future, because already you can get better quotes for wrapped ETH on Solana than you can on ETH-L1, which is absolutely insane.
Wow.
And I think that trend's only going to continue to get stronger and stronger over the next few years.
Oh, it's insane. Insane metric. I'm just looking at this chart right now. Jupiter traders by bucket. We'll link this one too in the show notes. But basically the story here, other than like the massive increase in volume, right, which everyone knows, is how much more people with a lot of money on Solana are trading on a weekly basis. So for instance, in the last week, 130 people did over 1 million in weekly volume. 1,500 did, 100K to 1 million. 50,000 did 10 to 100K. That's a very material amount of people, right? Like if we go back to just, I don't know, this summer, there was 5,000 people total using this, just 5K. And now there's 5K doing tens of thousands, hundreds of thousands of dollars of volume on Jupiter. The wealth effect is real. It's happened. It's there in plain sight. And we're like in inning 1 or 2 of this bull run. I think it's clear to me that we've kind of crossed this chasm. We have the capital here, and really interesting things will be happening on Solana. So I don't know. I was pretty blown away when I saw this chart. I mean, it's basically saying that 20% of all users on Jupiter are doing more than $1,000 in volume. So they're all 4 figures or more. So that's like, you can't really make that dollar store kind of chain meme anymore. Like people with money are kind of using this in decent size for retail, especially. That's pretty interesting to me.
Yeah, I mean, I think 2 factors, isn't it? It's Sol has 12x'd or something from the absolute bottom in a year, and the SPL tokens have generally done 10x, if not a lot more. And the meme coins, some of them have done 100x, if not
Yeah.
more. So there's huge amounts of wealth that have been created. And then the other thing is how quickly liquidity will travel if there is airdrop incentives. And we saw it during the last bull market, so I'm really not surprised. But when you consider now the size of Solana, the ecosystem, suddenly those airdrops hold a lot more attraction to liquidity that's currently sitting outside the ecosystem. So we're just seeing this onboarding, and then it creates this virtuous cycle, because as more liquidity comes through, the trading volumes go up, the NFT prices go up, the airdrop rewards are going to keep on going up as well. So we're just going to, the wheel has started, and it was that cold start problem which we were facing during the bear market. And as you say, I think we've crossed the chasm, and that has now, well and truly is behind us. Exemplified really yesterday by Franklin Templeton on their US Twitter account, including basically saying Bitcoin, ETH, and Sol. And saying, what do they say about ETH? Is it having a midlife crisis? And then including Sol as one of the big 3. And I think it's a good manifestation of where the market is right now.
Insanity. I didn't think this all happened so fast, but it clearly has. Well, this was super fun. We covered a lot of stuff. I think we should do this more often. It's good to just take a pulse of what's happening. And sorry, I just got reminded of Jamie Dimon and the Satoshi comment. So that's how you know. So the one closing comment I'll make is the top signals for the last market are going to look very different from this market. That's the takeaway from this Franklin Templeton thing, is like, that's not a top signal anymore. Now that's like the baseline. So multiply that by 10, and that is actually the real top signal. I think Chow kind of tweeted about this or something along those lines. And I agree. We're not going to be able to recognize them. So let's get better at recognizing them and take things to the next logical extreme before we call the market.
Because if we're going to get to $10 trillion asset, things have to go 5x crazier than they did last time.
Yeah.
So I completely agree. I think as well, like the meme coins starting a bull market, and retail aren't even here yet. That's the crazy thing.
Right.
Like they're still not here. Like this is just crypto people, and I think it's the smart money basically that's come in, and and that wealth effect now is circulating around the people who are already here. Retail aren't here yet. They'll get here when Bitcoin hits all-time high and suddenly it's sprayed all over the news channels. That's when they come. So 100%, this gets a lot crazier. And people who think that WIF is going to top out at $1, which is, it's like a 2x from here or something. It's like, no, this is, everything's about to go crazy.
You have to remove the bear market bias and really open up your mind for insanity, which is uncomfortable to do, but perhaps it's time to do that. Well, awesome. This is a fun chat, and we'll be doing this more.